On this video, we're going to go through our trade ideas in the last few weeks, see how they've done, win or loss, and what to do now. We're also going to talk about our latest trade idea, which we're going to focus on gasoline versus naphtha as we get into summer season. So stay tuned for that one. Okay, guys, so straight into it. If we start nearer term and go further out, our latest trade idea was about diesel or gasoil flat price. We liked the flat price because we felt that the kind of general market was in a kind of oversupplied theme or bearish theme, but you get more bang for your buck being short the diesel because you get the short diesel versus crude prices as well.
Yep.
And we had a trade layout for all that. And yeah, do we just want to go through how it's gone since last week?
Yeah, so we brought this up as a contrarian trade, right, with multiple entries because we acknowledged that it was basically trying to catch the top. So if you look at it from around the 13th, I think our initial entry was around 614.
Yeah, 614 with a stop at about 620.
And that was the first go. So if you look at the chart, I mean, where do we go? We actually trended up.
Yeah, I think that one would have got stopped out pretty quickly.
So we would have hit our first stop at 620. Yeah. And then, we didn't kind of give specifics for the next entries, but I mean,
the idea was to, watch it normalize and then kind of pick your re-entry point. So
exactly, yeah.
Probably would have re-entered, 625 again, maybe got stopped out again on the 630. But we said split your capital into four goes. So on the third go, you would have finally captured a pretty decent move down.
Yeah, I feel like, it probably would have been somewhere around this kind of 630 level realistically.
But even if it was 625 kind of levels down towards 620, you would still be into the turn now. And so as it's starting to play out, and it does look like it is, we're kind of probably nearing that time where you're starting to scale in and believe in this as a long-term trend. Or do we think we're a while away?
Yeah, I think like basis what we're saying, we're probably getting to that point. I think we were looking for probably more of a
decent correction.
A decent correction. But having said that, if your kind of starting point is higher, if you're sort of $15 or so into the trade, then
so if you're in a contrarian trade, what do you want to see? I mean, you can see the left side of the graph, as aggressive moves up, and you want to be stopping out quickly, the tight stops like we suggested. This is what you should expect, right? We're coming to the end of what we think is the end of the trend. So you have to expect volatility. Now, as we kind of started to weaken, and you can't always get your timing right, but you can see the volatility starts to decrease. Mm-hmm. The volatility is starting to decrease and a trend starting to form south or down. That is what you're looking for to actually say the trend is coming in. You don't want to necessarily rush into the trade at this point, but this is a good indication, lowering volatility and a new kind of trend starting to form that's a bit more stable. So it looks good. But if you've just entered the trade and you're definitely not late, this is kind of the beginnings of this trade. And we did always say this is a long-term trade.
Yep.
As we're trying to look toward capture a long-term movement and outright prices for the rest of the year or the balance of the year. So yeah, I would say pretty much holding off until we get to that support level that I think we said was around 603 or consumer buy.
Just above 600, I think we saw as kind of previous.
So I would say if you're in the trade as your third time, you could probably still hold out and wait for what we think might be more consumer buying as we head towards the low 600s, and be patient with this, because as it starts to break and as the trend kind of continues with more and more conviction, you'll get your opportunity to sell more. So that looks like it's going okay.
Yeah.
And kind of to plan roughly.
Yep.
Yeah, and I think as well, as the trend starts to establish itself and that volatility starts to disappear, that probably give us a bit more comfort to start moving the stop down and then sort of locking in some of those gains, which then would give us a bit more capital to deploy to scaling up the size as well.
Yeah, for sure. Good point. Okay. All right. So next one, I think we should look at the Brent-Dubai. So we said that probably the best one for Onyx Markets was December, or Q4 or December, kind of something toward the end of the year.
Yep. So on the screen now, I've got the chart for the deck Brent-Dubai. So I think that this time of suggestion was around the 23rd of April.
So I think it was actually slightly later. It was about the 29th, 30th. So it was just prior to that OPEC meeting that took place over the weekend.
Yeah, so then you can obviously see the reaction to the OPEC news. I mean, you had that sort of structural rally across like the whole Brent-Dubai curve, basically.
Yeah, and this is important to judge the market state, because the market had been short for a long time. So again, no trade really is the same, but it kind of rhymes. There's things that repeat itself. This was a market that was short, and we also said is very hard to scale into. This contract, tends to move in droves, and like you just see there, right? So an OPEC announcement gets made. We'd like the trade anyway, no matter what happened in the OPEC announcement, but it was a good risk reward if OPEC were produced to produce more crude. They announced that they would. Huge spike, short market, running over itself to buy back. And this is a very dangerous time. So if you're in the trade, you need to wait for this, right? You cannot be chasing this market to buy more because it's just too volatile. We're talking about probably a standard deviation of between 10 and 15 cents on a 20-day period before this trade, suddenly going up to, a 50 cents up, 50 cents down. You have to stay out whilst the market is doing that. If you're in the trade, great, wait and see it play out before you buy more. If you miss the trade, it's fine as well, because you do get these aggressive pullbacks and volatility. But you can see for sure after this explosion of volatility, there is a very clear trend forming. And I just don't think it's too late for this trade, because we're only up to, what are we saying now? 60?
Yep, 60 cents.
Up to about 60 cents. And the entry we said was, small negative around flat, or even if you got small positive. But this is again a long-term trade. We're going through a structural shift in OPEC bringing back oil after 5 years of really, bringing it all the way down to the brink of what they can supply. So this unraveling should be a slow, steady move upwards in Brent-Dubai. We're seeing all the evidence that this makes sense. We've got the data Brent market being stronger, refinery margins, the Dubai market getting weaker. The Chinese market doesn't seem to be buying any more after buying a spurt with low prices. We've got the Iran talks potentially bringing something back and certainly leading to bearish sentiment on the Dubai benchmark. And generally speaking, the spot market has kind of been unraveling after being so strong for so long. So all indications say this is a long-term trade. If this is a new trade, I would still, if you missed this trade to begin with, you've still got a great entry price here, because a normal price level is kind of $3 to $5 per barrel, which is a wide range, but that's kind of normal range. So for it to be still not even $1, you've got a lot of room to be in this trade, at least another dollar. So it's just looking good, basically. But if you were looking for a scale in, this is kind of the time, right? Because the volatility again is lowered and the trend has been set. Any pullback, slight pullback, is kind of a nice re-entry point. So you've got a good layup here. And you could almost just break out that volatility spike if you just ignore that and look at the overall trend. It's in a nice channel. So yeah, that's all kind of.
I think we even said at the time when we were discussing it that you almost wanted to see that volatility dying down before which weirdly was going to give you more confidence that the market had kind of readjusted, and then you were going to look for another kind of more steady move higher. We were kind of expecting this like hyperbolic reaction because of the short market initial reaction. But I think you actually said at the time, like, we don't think it's just going to keep going. We feel like there is going to be a bit of a correction, and then things are going to normalize, and that's when you can maybe start to build your position again. Because you've washed out a bit of that kind of panic on both sides, I guess.
No, exactly. But I just want to reiterate, like, this is why it's worth definitely talking to us. Reading around if you can and getting historical data, because every contract has its dynamics. Like we've said before, gasoline market tends to be a long only market. There's reasons why there's not much buy side hedging in gasoline, because the gasoline buyers are end users. They're literally us in the street. And whilst we're trying to bring that kind of hedging hopefully long term to the world, that's not really a staple flow. So you tend to get long only speculators, which has its own dynamics in the way it moves. Brent-Dubai, its dynamics is very herdy and shifty. It's one way for a hell of a long time, and it's one way for a hell of a long time as well. And you get these cyclical shifts. It's a really dangerous market to be buying as the market's rallying or selling as the market's selling. You need to wait for pullbacks. That's just the nature of the market, and that's all I'd say on that one. Okay, so I think the other one was the fuel oil crack. We felt that the refinery margins were getting very strong, too strong, sustainably strong, and fuel oil being a waste product. And we understand there's agendas going on in the front. And again, if you're new to trading this kind of global oil market, when things going on in the spot market and you can't understand, or there's not really a story for it, it's dangerous, right? You want to stay away. But if long term it doesn't really make sense, and we felt, and in this scenario, we felt that was the case, because ultimately OPEC bringing back their supply, that's more heavy crude. that's more supply of fuel oil, and fuel oil is a waste product. So for it to be so strong just didn't really make sense to us. So we said, again, go out more towards December, more towards the end of the year, because that will be less volatile because of the forward curve. And we suggested, I think, December.
Yeah, we did. Yeah, I've got a December chart up here. Yeah.
Okay, so let's get that one up. This is probably the one that hasn't done so well. I forget the exact entry level.
Yes, I think it was around
750.
750, 755. And yeah, it was another kind of contrarian trade, wasn't it? We were sort of selling into a rising trend.
I think there was a like long term, yeah, it was selling, but I think we felt like in the short term that sort of it looked like it peaked a bit, and we were actually short term trending down. But yeah, like longer term, it's just been kind of pretty one way. But yeah,
well, it's a good reminder that there's false signals sometimes when you're contrarian trading. You do need to be careful. But if you're contrarian trading, again, remembering that you're trying to catch the turn, but really what you're trying to do is carry it from a contrarian trade into a trending trade. So you need to be patient to see that trend. And if there's not the movement in your, if you don't think the target price is far enough for it to really be a long-term trending trade, you shouldn't be doing the trade. But this is an example of where we think the fuel oil crack could go from whatever our level was, minus 750, even 8, down towards, I think it said 10 at the time, but it could be 12, could even be 20, right? This the fuel oil crack in oversupplied crude markets. Minus 20 is not ridiculous. Minus 15 is very normal. So we've got a big sell-off to come if it's going to play out. So I think you have to be patient with this one.
Yeah.
And there's been some indications, I would say, some false signals, some sell-offs, rebounding. It's getting more volatile on the front and even volatile in the back end, which again, if we relate this back to even the gasoil flat price and some of the things that have been coming to the end of the trend, you expect volatility and then a lowering out of volatility when you're reaching that. I would say this is kind of playing out the same way. It's volatile, but it's starting to level out. The indication from our trading floor is that it's looking a bit heavy. I think we need to see a couple more weeks of this level out, and then we would be wanting to re-enter this trade if you're out of it, or maybe starting to look to scale in. But yeah,
I think that's right. I think it would sort of get edging up towards our stop. So I think if we were to get stopped out, we'd probably just wait and see moment rather than immediately trying to re-enter the trade.
Yeah, you're looking for some more signals to sort of go again, but fuel market is an enigma at the moment.
It is an enigma, but again, being patient and realizing that once you catch something in this market, it's got a long way to go. We've got the rest of the year. We've got relatively fresh books still. There's some traders that have made their money, but there's a lot of hedge funds that are now out the game because they've lost their money, which kind of sets up a new trading dynamic that's a more orderly, more normalization. We keep saying that word, normalization, and we've got 6 months for the market to see this normalization play out. Normalization in the sense of OPEC bringing their oil back, the big trade wars coming to an end, not trade wars, trade wars coming to an end, but also real wars hopefully coming to an end. You've got return of shipping channels coming back, like the Suez Canal. All these normalizations mean we need to see these levels go back to normal levels, and this is not a normal level for the crack. It's been too long. Normal level more like 10, 12, maybe even 15. So it's a long-term trade. That's a lot of money to be made in $7 per barrel. You've got multiple scaling opportunities there in a long-term trend. So cool, let's leave that there. And looking forward, so we like the gasoline versus naphtha, don't we, Harry? And why would you summarize that?
Well, I think like we touched on in the previous podcast.
This is on it again?
Yeah, so I've got what have I got here? I've got the July gas snap here on the screen.
Okay.
We said that we've seen some profit taking in gasoline. Felt like that kind of, we weren't overwhelmingly bullish, but we did feel like, there was going to be some support there. And probably more importantly, we're starting to see naphtha, wobbling and showing signs of that kind of like very heavy market where people are.
Yeah, I think for us, it was such a nice orderly rally on the way up on gasoline cracks. We got the move, we got a rally, the market was in the trade and it's taken profit on the trade, which is very unusual for gasoline. They usually ride it all the way up and it gets pretty messy. Now, with the open interest declining in gasoline, it seems like the industry is mostly out of that trade from a speculative point of view. This is before peak summer. And then the light ends market, if you like, so gasoline and naphtha traders, they tend to trade both of these products. They've put a lot of risk in being short naphtha cracks. And that hasn't come off for a long time. It's starting to weaken now. It's not my favorite trade because it feels a bit crowded, but it is weakening and there is a lot of investment to see that weaker. And it does make sense from a refinery margin point of view, from a supply point of view. If Iran comes back, they have a lot of condensate supply, which is basically very light crude, it's not even considered a crude, and it's very linked to naphtha and LPG. So more of that coming online, that's bearish for naphtha cracks. But either way, if that naphtha crack gets ground down and comes back to normal levels, it's kind of -3, -4 levels, that comes back to -7, -8. Meanwhile, you've got almost like an underinvested gasoline market. Whereas the summer's still a couple months away until we're peak summer. So if we trade, let's say August, which would be peak summer, or July is fine. We actually think, or I think it's pretty safe to say, an underinvested gasoline market, whilst the peak demand is around the corner. You can hold gasoline relatively comfortably, but if you hold gasoline long, short naphtha as a differential, you've got a really nice relative value trade there, where you're exposed to the short naphtha that the market is, but you're also got a bit more protection by being long gasoline. So I just like that trade. That's a nice layup. So if we get the graph out, should we say August or July?
I think maybe August, because you maybe want a little bit more time to, like, when you said it. So August is a good month. It's got a mid of that Q3 period, so you've got a bit of time for the sort of summer rally to really like manifest itself.
I like the graph here as well, just eyeballing it. Since basically mid-April up now, we've got a very nice channel there that you could even draw the lines on it if you want. A couple peaks, couple troughs, but nothing drastic. And it's quite stable volatility there. So if you can draw out, you could treat this very technically as well. Try and get the trend line from the two peaks there we've had in the last month and the two troughs, and you've got a nice level to kind of entry level in the coming days to try and pick hopefully the lower end of that channel, and just see it through. So this is definitely a trending trade. I think it's a trending trade, but we're not expecting like absolutely astronomical moves. So I think I'd leave the scalings personally. And if you want to, you obviously do what you want. But I think for me, a good setup here, if you want to just capture an orderly rally, is to kind of put a very reasonable stop that I think, again, the trend lines I just suggested gives you quite a nice natural stop anyway, something below that. But if you're talking about entering, kind of what level are we talking about market right now?
Well, as the current value is around 123.5. I think if you were looking at trying to finesse the entry a bit, you'd be looking more towards around 120, maybe 121.
Yeah, if you could, fair enough. And then stop loss, I think you would know that if we go to kind of recent lows, we've got 116, certainly 115 and lower would be, I think, enough volume to suggest, enough room to suggest that if it was to break through, you're kind of breaking this nice trend. Yeah. So I would say that's a reasonable stop. So it's tricky here with the conversion. So we've got a gasoline versus naphtha that it usually trades in
dollars a ton.
So if we're buying, we usually use the benchmark $1,000. So $1,000 here. Let's just say we enter it. Let's just make it easy and say we enter it like 125.
125, yeah.
Yeah, just to make it easy. 125, $10 per metric ton would be pretty reasonable.
Yeah. So 100 tons.
100 tons with a
$10 stop.
And it's pretty clean. And that's you're just going to put your volume up front. And if you want to just zoom out a bit, Harry, like what kind of levels can we expect? This is probably a time to bring up a seasonal chart as well. But I guess we kind of need to ride this for at least a kind of 2-to-1 return on the stop. So we should expect maybe a
$20 take profit. So somewhere around the 145 mark.
Yeah, and that would be good. But I would say something trending like this, that's your initial profit target. You could just start to tighten your stop quite aggressively once it reaches that point, or take half off and run the rest. But I think just taking full profit at that would be probably just not running your winner enough, given how much it's trending. And especially if it gets there in a relatively low volatility way. If it suddenly spikes, and this is another thing that I personally think about markets, is if you get it kind of feels like you get lucky. If you're in a trade and suddenly it spikes because you're long and you can't explain the volatility and you can't really understand the positioning, it's a good time to just take it off because you can't explain it, then take what the market's given you, because it can just as easily snap back, especially if it's headline created or anything like that. And you can always re-enter again once the market's calmed down. But if it's in a nice orderly way reached your profit target, then it's trending and you've got to run that winner. It's just all about slightly ratcheting up your stop. And that's kind of all you need to do. So that's a nice simple one. And from a timing perspective, we want to see the market getting into kind of Q3 months trade. So that's July and August. So I think you want to hold this into July for sure.
Absolutely, yeah. And you want to see that, give time for that Naphtha correction to really like get some momentum and play
and maybe some summer driving demand.
Yeah, and that too. Yeah.
And if oil prices are lower in general, so if Brent prices are low, let's say a few dollars lower than where we are now, or even around where we are now, that's a good indication to keep your trade on as well, because that's a quotation marks lower price environment than last year, right? We had a lot higher gasoline prices in peak summer. So if you're buying that, so if you're long this and flat price, the outright prices stay low, keep in the trade. However, if we get a big rally in Brent prices, this is going to weaken the narrative for the trade, I think, quite aggressively. You will actually likely see there is some correlation with gasoline versus naphtha as a differential with flat price, with Brent. And so I think, funny enough, if Brent does rally, you will get a performance in the gasoline versus naphtha, but you've got to watch out because the demand will start to deteriorate, or the demand story will start to deteriorate. Inflation stories will start to come in. Maybe some reactions from the Trump administration that could start to target gasoline, more waivers for biofuel, ethanol. So I'll be a bit wary on that. So two key things to be wary on this trade, but it's a nice, simple one.
Yeah.
Great. Thanks, guys, for that. And listeners out there, any questions you have, please just chuck them on the chat, the comments, or reach out to these guys, onyxmarkets.co.uk. Plenty of information there. So stay tuned for more, where we'll be reviewing these trades that we just suggested, ongoing, and coming up with plenty more. Thanks, guys, and see you again soon.